So, having understood the thing, we are left with now the purchase and sale. So, whenever you saw asset purchase, asset sold, or goods purchased and goods sold, we said the other account can be either be cash or person. Cash or person, here it's cash or person. For goods purchased, other account is cash or person. For goods sold, other account is cash or person. Now the question comes, why is it? Now let us understand that. So whenever you purchase something, you can purchase either on cash or on credit. You purchase either on cash or on credit. Now, for example, suppose your father. So suppose you go to a general store and you want to buy some rice, and you buy 5 kgs of rice, and he says it's 200 rupees. So you pay 200 rupees and purchase the rice. So that is called, it is a cash purchase for you. It is a cash purchase. So whenever you pay the cash and take a good or a product, such kind of purchase is called as a cash purchase. Now your mother asked you to go to the general store in your locality, and she asked you to get 5 kgs of rice, and because your father is out of station, the mother says, you say a shopkeeper that once father comes back from out of station, we'll pay you the money. Now this time you go to the shop, you buy the 5 kgs of rice, the bill comes to 200. Now when the shopkeeper asks you for the money, you say that your father is out of station, he'll be coming back in a week. Once he comes back from outstation, we'll be paying you that, and you'll ask him to write in the khata. Okay, so such transaction is called as a credit sale, where you took the goods, you didn't pay the cash, you postponed it paying to a future date. In such case, what you must do, you must remember the name of the person to whom you must pay the money. So this is called as a credit sale. When a shopkeeper, when you go to a shop and and buy a product, you pay cash. The shopkeeper asks you your name, address and all that? No. So when you go to a shop and you buy a product, you don't pay him the money right now, and you postpone the paying of money to a future date after a week because your father is not in station. In such case, what will the shopkeeper do? The shopkeeper will write your name. He'll write the date on which he sold the good, and he'll write what is the product sold to you and what is the value of the product and when you are going to pay the money. So whenever a person is not paying the money immediately, he postpones it to a future date. In such case, you have to write the name of the person to whom you have sold the good, and you also have to write the date on which he promised to pay you the money. So there you write the name of the person. So such kind of sale is called as what, or such kind of purchase is called as what? Credit purchase. So in a cash purchase, we don't have any problem. The other account will be cash because we received the cash. But in credit purchase, since we have not received the cash from the person and he promised to pay at a future date, in such case, we have to remember the name of the person from whom we must receive the money or to whom we must pay the money. So this is what is called as a credit sale. So whenever there is a purchase or sale, the purchase or sale can be either for cash or for credit. This you experience at your local general store, where sometimes you take a product without paying the cash because your father and mother are probably out of station, and you'll promise them to pay once they're returned back from their outstation trip. So when you take a product and pay cash, that is called cash purchase. When you take a product and don't pay cash immediately but postpone it to a future date, such a purchase is called as credit purchase. In such case, you need to remember the name of the person to whom you must pay it and when you promise to pay him the money. That is the reason why whenever you look at purchase or sale, the other account can be cash or person, cash or person, cash or person, cash or person. So I hope the concept is clear. So now what did we conclude? Now we concluded. Now having known the difficult part, well, the other part we said is what? The other part is either cash or person. Now with regard to drawings, with regard to capital, drawing, expense, income. The other account is what? The other account is cash. For all these transactions, the other account was cash. Now with regard to purchase return, sales return, cash received, cash paid. With regard to all this, what is the other account? The other account was person. Now with regard to asset purchased, asset sold, goods purchased, goods sold. The other account can be what? The other account can be either cash or it can be a person. So if it is a cash purchase, you take cash. If it's a credit purchase, you write the name of the person. If it is a cash sale, you take it as cash. If it's a credit sale, then you write the name of the person. So now we know this is the difficult part, the other part where you had to fill in the blanks. It was either cash or person or cash or person. So I think this is one technique which you're following to write the journal entries very easily without any difficulty. I'll also explain you actually how we write the entry, and there we have to identify what are the types of account in the transaction and what are the principles of account, and then we have to identify whether the account should be debited or credited. Now without taking recourse to all that, we are trying to write a journal entry like this. Now let us go back and recall it once again. Let us go with first all the debit transactions, then we'll go to the credit transaction. Drawing is always debit, so drawing account debit. To cash account, because the other account for drawing is what? Cash. Then asset purchase is always debit. Okay, we'll come back now. Now this is how we write a journal entry. So every business transaction is here. For this we write a journal entry, and every journal entry you have, it has a debit aspect, credit aspect, debit aspect, credit aspect, debit aspect, credit aspect, debit aspect, credit aspect. How do you know that this aspect is debit? After an account, if you write debit, that is a debit aspect. Before the account, if you write to, it is a credit aspect. After the account, if you write debit, it is a debit aspect. Before the account, if you write to, it is a credit aspect. So this is how we should write journal entries. And with the help of this, now let us try to once recall all the journal entries. Now look at capital is always credit. So to capital account we have written. So debit goes to what? Debit goes to cash. So it is cash account debit to capital. Drawing is always debit. So drawings account debit. The credit goes to what? It goes to cash. So drawing account debit to cash account. We'll come to purchase and sale later. Then purchase return always credit. So to purchase return account. So this is to purchase return account. The debit goes to what? Person, because we always return the good to a person. So it is person account debit to purchase return account. Sales return is always debit. So sales return account debit. The credit goes to what? Person, because we always return to a person. So sales return account debit to person account. That's a journal entry. Cash received is always debit. So cash account debit. Credit goes to what? Person. So cash account debit to person account. Because we always receive cash from a person. Cash paid is always credit. So to cash account. So to cash account. The debit goes to what? Person. It is person account debit to cash account. So expense account is always debit. So expense account debit to what? The other account is what? The other account is cash account, because expenses are always paid in cash. So expense account debit to cash account. Income is always credit to income account. The other account is what? Cash, because income is always received in cash. So the entry will be cash account debit to income account. But when you come for purchase and sale, the other account can be cash or person. Asset account is always debit, so asset account debit. The other account is cash or person. It depends upon whether the purchase is for cash or for credit. If it's for cash, it is asset account debit to cash account. If it's for credit, it is asset account debit to person account. Asset sold is always credit. Credit means what? To. So to asset account. The debit goes to what? Cash or person. If it's a cash sale, then it is cash account debit to asset account. If it's a credit sale, it's person account debit to asset account. Because in a credit sale, we are not receiving cash from the person. He postponed it, paying to a future date. Similarly, when you go for goods purchased is always debit, so goods purchased account debit. The other account is what? Cash or person. It depends whether it's a cash purchase or a credit purchase. If it's a cash purchase, it's goods purchase account debit to cash. If it's a credit purchase, it's goods purchase account debit to person account. Similarly, goods sold. Always credit. Credit means to goods sold account. The debit goes to what? Cash or person. It depends on whether it's a cash sale or a credit sale. If it is a cash sale, it's cash account debit to goods sold account. If it's a credit sale, we are not receiving cash from the person immediately. We are receiving at a future date. Therefore, it's a person account debit to goods sold account. So with this, we complete the introduction to journal entries, and this is how we write the journal entries, which have two aspects. And so these we know: capital credit, drawing debit, expense debit. Income is always credit. Now, what is the other account? The other aspect is cash. For purchase return, sales return, cash is a cash paid. What is the other aspect? Person. For any purchase and sale, the other aspect can be cash or person. So because what is capital? Cash given by the businessman to the business is called capital. What is drawing? Cash taken by the businessman from the business is called drawing. Expenses are always paid in cash. Incomes are always received in cash. That's why the other account for these four accounts is cash. Return. We always return anything to a person. Cash is received from a person or cash is paid to a person. So the other account for all these four transactions is person. For purchase and sale, if we pay cash and purchase something, then we write cash. Okay, when we take a product and we don't pay it and we postpone the payment to a future date, then we have to remember the name of the person. So that is called a credit purchase or a credit sale. In such case, for purchase and sale, the other account can be cash or person. So if it's a cash purchase, we take it as cash mark. If it's a credit purchase, we take a person. If it is cash sale, we take cash mark. If it's a credit sale, we take person. So the difficult part we know, the easier part is either cash or person. So with that, we look at the introduction to journal entries, and we conclude it here. I hope it's easy. I hope you have understood it, and thank you.